Good evening. Ira Epstein with your SPDR ETF market wrap-up. And this wrap-up is for one wild week so far. It is March 7th, 2023. Well, you know that Fed Chair Powell went today to the Senate Banking Committee and was drilled. We knew he'd have rough questions, but he was a super hawk. Not that the Fed's going to do this, this, and this. Again, his message was clear, but real clear this time. The market listened, and that's when you saw things dive. He basically drove everything down. As soon as the dollar soared off his statements, everything came down. And what did he say? All he said is what he's been saying, but he said it with verve, and he said it clear as can be. That's the things he hasn't done. He's been wishy-washy. He got an A+ from me today. Came out and said it's all data dependent. We don't have the data yet. We're waiting to see how the jobs report, how the CPI is going to come out, then we're going to talk. When asked about how strong the economy is, it's labor. It's out of whack, if you will. It's overly strong. What do they have to do? They have to find a way in order to tame inflation to hurt it. And with that, Senator Warren, you're going to drive people out of work. Chairman Powell, to a degree, the market's got to do what it's going to do, and you generally entail job losses. What he should have said is, do you want us to go back to where Mr. Volcker was with 19% plus interest rates in order to beat the beast back into the bottle? I mean, that is the reality of the situation. You can't worry when you have unemployment at a historic low. When asked about it, this is crazy how low unemployment is. And tomorrow we're going to get a wave of things. Number one, you have the Fed chair speaking again, this time to the House committee. You have the JOLTS data. You have the ADP data. On Friday, you get the jobs report. On Tuesday, you get the CPI numbers. Along the way, we got the Bank of Canada. Next week, we're going to have the European Central Bank. And the week after that, on the 22nd, we have our bank. Whoa. So you got to buckle in. You have to understand what's going on right now. And I think today's action will not be matched by what is said by the Fed chair tomorrow. Generally, the first time he says it, if he delivers it right, doesn't have a lot to clean up. He delivered it right. What you have to deal with is how strong is that jolt's going to be? Are we going to still see 1.9 jobs being offered for every able person? Come on, that's insane. It might be there. ADP is looking for a big gain in jobs. Okay, that's another one. We're looking as we go into our jobs report for, I think the average now is 224,000. That's big. It's not the 517, which may have just been an aberration of some type. It might even get corrected. I don't know. They can do a revisionment. But 224 on its own, a positive number. I don't think if we come out like that, you take that as a bearish number in any manner. It's still a very strong economy. So anything priced in dollars gets hurt. Investors get scared. The stock market sells off, but it didn't crash. That's not what occurred. You know, you had some good things. Look at Weight Watchers. What did it go up today? 50% in value because they're going to have a drug to lose weight. They're partnering. Why not? The food thing isn't working to a degree. Some people find it to work, but most people that go on those things within 3 to 4 years, other than Golo, right? Because just look at them. I was 400 pounds, and I'm now I'm 200 pounds. I'm in great shape. I can walk around. You understand what I'm saying? I do feel for these people. Let's start with that. I do agree. If there's a drug that can help them do that, it makes sense. And I applaud Weight Watchers. They jumped on it. I think it's smart. Okay. When you take a look at SPY, you're caught between that high, this low, and you're getting your bounces, and it's vicious right now. When you look at it, you're not in a trend. You have a higher high and a lower low pattern. That's not a trend. The market had a bear market bounce in looking back at it from the 200-day average to the 18. And when we got to that 18, as we were approaching it, I wish last night's tape would have come out. I had an electrical problem outside of my house. We had big rain. It hurt one of the outlets, the outdoor outlets. It fried circuits throughout the house and the wiring coming in. So I had the electric companies here today, the city. I had all kinds of things. It was a nightmare day. It's all fixed now. But last night when I recorded, and I did the recording, none of the voice came through. And I went through the house and I checked. I said, maybe I just forgot to turn it on. I don't think I did. All right. If this one, I'm checking over there. I can see that I'm recording. That's where I'm looking. And I can see the green bars moving. All right. In any case, I would have said, hey, all you've done is gone up to the 18-day average. And this, I know what I said. I said, we got to see the reaction to the market, to the Fed tomorrow. It's everything. I don't know what he's going to say. I don't know if he'll be a dovish as he was many of the others, or super hawkish, which he rarely is. Well, he was very hawkish on this particular time. And what the market, you can say, is it had a nice recovery rally and it failed. Are we trending? We are not. We're drifting in this big sideways action right now. I don't even think it's a trader's delight. It's just a mishmash. You're up one day monstrous, you're down next day the same thing. That is hard to trade. When we come to gasoline, what do you think you do the first time you hit the 200-day average in a Bollinger Band and you're not embedded? Have you taken the enhanced Bollinger Band course? It's on our website, iraepstein.com, under education. Right after this, go take that. You would learn to the T just what I teach, and away you go. You'd have been out. In the video, I told clients here to come out, and I'm not sorry. It hasn't really gone anywhere just yet. Is it trending? It isn't. You got a lower low, higher high. In terms of a short-term trend, it's not. It's pretty much a sideways market. Tesla. I understand that Tesla can afford to take car prices down and still get to the point, because today there were statements on it where they're going to be cash flow positive very shortly. After all these years, it's time. That's going to be a good thing. Can they keep it that way? Probably. Can they keep their competition at bay? Did you see Rivian? They had to float what's called a new type of bond. None of these companies are making money. Their electric divisions are losers. If you go to China, you see it. China put out new programs now. They are basically giving you money to buy the cars. That's how severe things are. And Tesla's grabbed and kept their market share. And as they go down, they force everybody else, and that creates the losses in these companies. But that's because Tesla was here a long time ago. They now have volume. They have the production lines. It's a very hard game to create. They've done it. But as they take in less money because they're cutting price, the market falls. Would I get bearish at a lower Bollinger Band? Not with your money. And I'm saying that nicely. In XLF, all you did is you rallied back to the 18-day average and you faltered. Okay. XLI, stronger. Definitely still in the service sector, a good area here. But at a 102 level, are you overbought? You are. If you buy at 69 and you get up at all, you're going to be overbought. That doesn't mean you're not going to get people to reach for it with stops right back under here, this low right over there, which was, let's get to it. This is the number that you don't want to get under if you're going to be bullish, 170. So traders will be looking at that. They'll say to themselves, do I want to risk $1.30 something on the trade? Maybe. For me, I'm not interested until I get past the Fed, past the jolt, past the ADP report. Then I'll make up my mind what I want to do. I don't stand in front of a silver bullet train coming down the tracks and I'm going to guess right. Generally doesn't work. In stocks, you're stuck right here. You're stuck in no trend, just drifting sideways. The home builders, well, I don't care what you want to tell me. Home builders, if interest rates keep going higher, they have headwinds, serious headwinds. So you had a bear market rally. Why bear market? Because when you're under the 18-day average and you rally to it, while you're getting the short-term rally, it still has the bias down. And that's exactly how I teach it. XLE tried to stay over the 18-day average, a failure. It's not out of the woods. It can still be bullish here. We have to see. But the combination of the 100-day and the 18 is strong resistance. You're coming from down here into that resistance. You got to get over those numbers and then defend them on the way down to be bullish. You're not there at this point. Gold. Why do I want to own gold when I can get over 5% interest for 6-month T-bills, 5.25 maybe? And you want me to own gold. I don't want to own gold at that, okay? You can get on a 2-year note now, over 5%. That hurts the stock market. Why are you gambling in the stock market? Do you think your return's going to be 5% this year? If the Fed has to keep raising rates to fight the inflation. So that in itself concept is not friendly. Yes, you might be able to be a great stock picker, but the indexes, they're going to have a problem because they got to fight that headwind. That's a hard headwind to beat. In SLV, under the Bollinger Band again. Now, I just wanted to show you this. It had an uptrend, but it was still under the 18-day average. I left it on there, and boom, you just completely let go. Copper market, I have thought that we would stay in a swinging sideways action, and we are. Still disappointment out of China. They are absolutely furious. When you get the head of the government, President Lee, attacking the U.S. verbally, presidents in China don't do that. Their henchmen do it. Very upset with us. We're the confrontational people, and to a degree, he's right. Okay? But he created the situation himself, too. You know, he's not Mr. Innocent. At some point, everybody should sit down and talk. We still do tremendous trade together. There's a lot to be garnered by finding common grounds between two economies this size. And we'll see what goes on there. But higher highs, lower lows, TLT, all you did is rally back to the 100-day average in the 18. You lost the embedded reading. The goal was to get to the 18-day average or the closest main moving average. You did it, and boom, you ran out of momentum just there. I'm telling you, that enhanced Bollinger Band course, you learn the idea what momentum does in terms of price, the lead time it often happens. I explain it in detail. Website, iraepstein.com, under education. UUP, what do you do when you go up to the upper band on a 100-day average? So long, folks. I don't care if you go up. The odds of staying over that band number is only 5%. You're up big. I got to go through all those reports. I'll let you do that. And the flip-flop will be the euro, probably coming down to the lower band. I would look for the pros to do a lot of short covering there. So you put it together. You try to come up with a game plan. And every morning, I can't make it clearer, I work with you on that. At 5:30, we do our futures video. We review 40 charts looking for trade setups. We'll flip-flop back and forth between daily and weekly charts when we look at things. Not every single chart, but a lot of them. Then we do the same on the ETFs, the spiders, and the stocks. And I'm always rotating which different stocks I want to do. I've been doing SPY this week and last week here because I knew we were headed into this crazy jobs and I didn't know what to expect. And I thought the indices would be more interesting than the individual stock, and it worked that way. Just go to the website. You can go up here, click this, you'll see an icon. Just go into the research area, enjoy the videos. Can I be clear? I'm Ira Epstein. You have a good day.